Hi friends, as a part of initiative from Patwari Academy, we'll talk topic number 4 today on the management of exposure. So as a part of trade finance, if you see the most important thing is in the trade finance is the exposure. Exposure means risk on the for the transaction exposure, translation exposure, and economic or operating exposure. So I'll explain you all the three exposures. Transaction means for the entire transaction in reference to the sale and purchase, you are exposed to the buyer. You are exposed to the buyer's credibility, character, capability, conditions of business. So you do not know whether the buyer is capable of paying, honoring your commitment, right? He has got a capacity. What are the conditions of business? Let's take the conditions of business in like Sri Lanka, Pakistan, right? And likely Bangladesh also in the days to come. Okay, so if these conditions are like this, then you do not know. Look at the foreign exchange risk. Say, for example, like India, the rupee has gone from 73 to 80, but the conditions have not changed because of the TINA factor. Whole lots of money is coming into the country, and lots of investments are making lots of FIs because of the TINA factor. TINA means there is no alternative because of China's issues that the people are not willing to take FIs or FDIs are not willing to take exposure on China. That entire money is coming to the country like India. So that's the most important part. Then look at the other issue with reference to transaction, right? So like the like for example the four eyes which I mentioned. The four eyes number one, the infection, what we have all gone through the COVID, like the zero risk policy of the China, zero COVID policy of the China, looking at the invasion, Russia's invasion to Ukraine, almost 7 8 months are over, but nothing is seen right now. The third eye, the inflation. Okay, the whole all over the world there is a huge inflation, and if you look at like US 8.5%, Britain 10%, European Central Bank 10%, so like Turkey, Sri Lanka more than 80%. India we have 15% WPI. In fact, India it is more than 30% inflation, but only thing the data is being all first, so you are not getting the correct data. So this, but then there is a huge demand here. That's what driving the inflation, and a lot of money which is flowing into the country through equity market and all. So you have to always understand what is the transaction risk and how you manage this risk. Is it through the through the geopolitical risk, possibly in that country, or possibly like through the booking the hedging the foreign exchange transaction, or through various covering the country risk through ECGC and all. And the second most important is the economic or operating risk. So if you operate in a country like Pakistan, Bangladesh, Sri Lanka, Myanmar, Bhutan, possibly Nepal also, like Iran, there is a possibility, the risk of all these countries are there. So how do you manage this? You have to take the ECGC cover. That is a credit risk on these countries. Geopolitical risk you need to cover operating in these countries, right? So then coming to the third most important risk is the translation risk. You see the multinational companies like companies coming from US and all, they deal the business in all 150 200 countries of the world. So if an American company is borrowing from Japan, because they still continue to maintain the negative interest rates as compared to the interest rates in US, Britain, Europe, they are increasing. But Japan is not interested to budge on that. Because the inflation is around 3%, they are not worried. Even if the inflation in China is not worried, because they are more worried from the deflation point of view or the depression point of view. So what is happening? Many of the MNCs you will find borrowing from Japan. See, Japan economies is mostly driven the surpluses, and there is a lot of money which is moving from Japan to US and other countries because of interest increasing. So suppose a multinational company like Coke, for example, they borrow from Japan and they invest into country like India. So they have huge risk in terms of borrowing, currency risk, and similarly investing into country like India, foreign exchange risk, and the inflation risk. But they do it. That's a business. They don't want to expose their dollars into these countries. Okay, ultimately their dollar is exposed, but they would like their CFO to know to manage the balance sheet in all 150 200 countries, manage the whole translation of the currencies from the host country to the home country, like from Japan, India, Pakistan, any other country to US dollar back. Net of asset and liability, what is the impact on their balance sheet, net worth. So at any given point of time, first you have to understand the transaction risk, translation risk, economic or operating risk, and the next part you have to understand how do you cover this risk. Can you do the hedging by way of foreign exchange risk? Can you take the proper marine insurances? Can you take the proper credit insurance to take care of the geopolitical risk? Right? Can you cover the hedging of interest rate risk because interest rates are going up? So when you are taking the exposure in foreign currency, you have not only the exposure on foreign exchange risk, you have the in the present days you have the interest rate risk which is going up. So, considering these aspects, one has to manage this entire exposure management from the point of view of the businesses as such. So, it's a very important that everybody understand the exposure when you are investing, when you are doing export import business, when you are doing international trade, that what kind of transaction, translation, or economic operating risk is there, and especially it is very relevant for the companies, setting up the business units and all in other countries. See, there are a lot of money is flowing into the India. Why? Because there is a huge China factor. I told you, and companies like Apple also is considering shifting their manufacturing base to India. So there is a huge possibility of investments into India, huge possibilities of international trade, and it's growing. Let me tell you, there is no end to it. Okay, thank you very much. Keep watching.